Hello, everyone, and welcome to the Financial Advisors Want to Know podcast. I'm Catherine Tindall with Dominion. We're a specialty tax and accounting firm for advisor practices. On today's episode, I have with me Verity Larsen. She's got over 25 years of experience in the financial services industry with RIAs and major fintechs. She's seen flaws in the one-size-fits-all tech approach, which I think going into 2025, looking at the Kits's advisor tech solutions map has shown everybody that there's no, one best answer anymore. So in 2015, she founded Versoft Consulting. It's a consulting firm dedicated to unbiased investment technology guidance, which is really helpful. I think for a lot of firms, talking to a salesperson is very different than talking to somebody who's disinterested. And so as the fintech solutions multiply, her firm is a really great resource for advisor practices that are looking to find a tailored strategy when it comes to their tech implementation. So thank you so much for joining me today, Verity.
Thank you for having me. It's great to be here.
So we were going to start off by talking about, the place where you usually start in these relationships looking at new firms, which is conducting a tech and operations audit. So for firms who haven't done that before, what's typically involved in doing, a basic audit on their tech and op integration?
Yeah. So certainly, I want to just express the two do go hand in hand, right? You're not going to be operationally efficient without using technology. And a lot of people think that they can just go and hire additional bodies as they continue to grow, but that certainly is not, the best approach from a business perspective, nor is it sustainable. So we of course, as technology consultants, want to ensure that the technology you're using is right for your firm. And certainly as your business grows, as you take on potentially different clients, or you start investing in different types of assets, your technology needs can change. And then, of course, that impacts your operational needs. So when we're starting with a tech audit, really it really starts with just user interviews. We like to sit down with people from all different levels of the firm. And maybe your firm is 3 people. Maybe it's 25 people or it's 100. It doesn't really matter the size, but you're basically taking a sample set of people in different roles across the company. We want to talk to the person that is answering the phones and is having to look somebody up in a CRM to determine where they're routing a call, all the way up to the owners of the firm or, the CEOs. So we know what they're using, how they're using it, and that goes from, what reporting tools they're using, things that they're using to make maybe, investment decisions or, providing client advice. What are the tools that they're using on a day-to-day basis? And really a lot of it is just about observation. Sometimes things that people think are like normal, really are not acceptable. So, it's not even just about asking or having a firm do their own due diligence and like making their own list of things that they dislike or things they think are frustrating. And, everybody does that practice, but having that outside perspective is really interesting because we usually come in and people are like, oh no, I don't mind, generating this report and doing this work in Excel for 5 hours every week. And they think that that's just normal and that's part of their job, but that shouldn't be the case, right? And so we like to be able to observe and see what that practice is doing, so that we can identify what are the improvements that can be made. So yes, it really starts with interviews, really hands-on, like seeing what people are actually doing in their day-to-day life. And then we take that insight and we come back with recommendations for improvements and changes. And certainly those changes can be using the existing technology. And sometimes it can be adding on technology. Sometimes it's completely replacing technology.
Yeah, that's great because I think for a lot of the firms that I encounter where they're self-grown over time, like the tech stack can turn into like a Frankenstein's monster of, oh, we have this issue, like let's just add on like this new product, or oh, there's this new product that we can have access to, like let's do that and it'll fix it. But, especially as the firm grows and your team grows, it's like what you said, the person who thinks it's normal of, yeah, no, I spend, half my day on Friday. Like I encountered this not too long ago in a practice of somebody was doing something manually on the accounting side. And I was like, no, like this should be an automation. Like this is something where it's just a bank feed that comes in, and like you shouldn't be having to do this. Like the software is designed to do this for you. Is there a reason why like you think you have to do it this way? And people just don't know. And I think especially for the owners where you're juggling, you're wearing hats, you're spinning plates, realizing that, oh, I'm losing like a 30% labor efficiency on a couple of these admin roles because I thought that they would know how to do this efficiently, but they don't. And nothing in my system's broken, it's just slow. It can be really easy to miss those things. And I think for a lot of firms, when I look at things from like a profit and loss perspective, labor efficiency is the biggest issue, right? Like it's the biggest cost. And even like more than the tech side of things, which is separate, it's really the labor efficiency is the issue. And especially for finding ways to enable them and make them, spending less time on things that a piece of software could do, or, put in an automation, or, hey, maybe, we're on this platform, but given our client niche or our service offerings, we need to add X, Y, and Z. Like that just, makes a huge difference. So when you've been doing these audits, are there things that tend to be like the biggest surprises to the leadership, routinely for advisors to kind of like perk their ears up, like things that you find surprise the leadership in your results often for these?
I would say probably one, it starts with data and understanding that their data is not as accurate as they thought it was. Because going back to the statement about Frankenstein systems, somebody might be spending, hours a week. Like, oh, there's an address change. Well, I have to change it here, and I have to change it here, and I have to change it here. And right, there's like all these places, and then somebody gets interrupted and they forgot to go and change it in that one other location. So now you have disparate data sets, right?
Yeah.
And so which data set is the advisor referencing versus which the back office is referencing, or the client service rep or whoever. So starting to see how different data is in different environments, of course, can be kind of upsetting, honestly.
Yeah.
Now you worry about the accuracy and what if the information I've been reporting out is not accurate, or what if I'm even using internally to make business decisions is not accurate. It's not just the data about an address. That's a simple matter. That's just a simple example. But if you're talking about you don't have data feeds, going into both your reporting system and your CRM, but somebody is manually keying in, say, the market value of an account into your CRM because there's no data feed, but that's the system that the advisor is typically looking at just as a quick glance when talking to a client, and then they find out that number is not being updated on a frequent basis. That's very upsetting.
Yeah.
So
Yeah.
it really is about data. It's accuracy, it's control of the data. That's a lot of the kind of the top things that we see. Then certainly it gets into, I guess, understanding that their staff is not spending time doing things that are truly value add, which typically are going to be providing services to the clients. It's, just the tedious data entry, data management, setup, whatever, that's just so time consuming that's where they end up spending a lot of their time.
Yeah. Yeah. Because I think, something that's been really insightful on our side, and I know for probably a lot of firms it's a similar thing. It's like if you don't do hourly based billing, still doing like time studies and things like that internally to be able to see like, oh, okay, so this is this is where it's all going, and here's how we're going to capacity plan and
Mm-hmm.
those kind of moves. But if you don't have that information, it's easy to miss. Like we did a time study recently and found that somebody was doing some being really inefficient on something, and then when we followed up with them, we're like, oh no, like this, you don't need to do this way, like you're doing extra steps that don't need to happen here, or whatever it is. It can be really easy to miss that if you're not regularly checking it.
You
So in
know,
terms of, yeah, go ahead.
sorry, I'm just going to add, I think one other thing that's interesting, and of course this applies to firms that are a little larger where they may have multiple people that are doing the same role,
Mm-hmm.
seeing the difference in efficiency from one employee to another.
Yeah.
And if anything, sometimes that just helps identify certain people's strengths or weaknesses.
Mm-hmm.
And so more from a employee management perspective, doesn't mean that those people are like being let go or out of a job. It just means, hey, maybe there's some additional training that needs to happen with staff, or somebody figured a better way of doing something but they didn't share it with the rest of the team, so
Yeah.
somebody else is doing things much better, much faster, and just knowledge needs to be shared. Or
Yeah.
you find out that, hey, maybe this isn't a person's strength. Maybe they'd be better suited doing, a different job in the company.
Mm-hmm.
So it can actually help from a, personnel management perspective too.
Just a slight interruption in this conversation. I wanted to bring to your attention two things that are important for you to know. So, we're always at the mercy of social media algorithms. So, if you can subscribe to the show, that would mean a lot to me. Even more to me if you can leave a rating and let me know what you think about it. But we have a new newsletter that's coming out. It's going to be very active in 2025. That is specifically around tax issues that I'm seeing advisors face in their own practices, changes in legislations, and the pieces that I think are critically important for you to stay ahead of as an advisor with the new administration. So nearby, wherever you're interacting with this, will be the link of how to sign up for our newsletter. Also nearby will be the link to my LinkedIn, which is the best way to get in touch with me, learn more about what we're doing for advisors in the tax strategy and compliance work that we do, and also to get access to the various tools and interviews and things that I do, specifically designed to help you improve your practice, improve your own tax situation, etc. So let's get back to the episode, and thanks for tuning in. Yeah, absolutely. And I love, when firms are able to tie that back into, if you're measuring these kinds of things, then you can structure more incentive-based comp things
Yeah.
related to performance, right? Because if you can align what outcomes you're trying to get from efficiency perspectives on certain things while maintaining, certain quality of work matters, it's like great. Like now you're incentivizing people to be more efficient, to try to find more efficiencies. And then you can tie in group incentives, right? Like, hey, if we all as a group hit this number, hit this goal, or hit this ratio off of our data, we're all going to get some kind of benefit off of this. And so that incentivizes like information sharing and things like that, where people
Yeah.
just, I think a lot of times, and it can be easy to forget this when you're running a firm and you've gone through the whole progression of entrepreneurship yourself, that when you're working with people that are still very much in that employee mindset, sometimes they just don't even realize, oh, like this thing that I just figured out, this is valuable to the business and I really should be sharing this with everybody else. Like a lot of times, like people just don't, at least in my experience, like on the employee level, there has to be other things that click in to help them start thinking more like that.
Yeah.
Because it's just, you get used to like, okay, I'm here, I'm doing X, Y, and Z that I've been asked to do, and trying to help out and that sort of thing, but not realizing that they don't see things at a high enough level a lot of the times, especially like with um, you know more junior positions and things like that, of finding better ways to get things done. But
Well, you
so in
you
terms,
also,
yeah,
sorry, again, I think what's really important about that fact too is you then also have the end result where a client may be getting a different experience. Different
yes,
clients get different experiences. So if you
yeah,
have a firm that has 5 advisors with 5 CSAs and they're all doing things differently, some others, or they're even just providing a different level of service because of how they're working. That certainly is not a good experience either, especially if you tend to have, if you ever do any sort of client appreciation events where you bring your clients together. And if you have clients now talking to each other, oh, well, my advisor does X, oh, mine does Y, and they start seeing that they're getting a different level of service, that's not good for branding and name recognition either.
Yeah, no, that's true. That's true. So I guess maybe backing up a little bit to the data issues that you've seen in firms. So for those in leadership at firms that are listening to this, and maybe they're at the stage where, when you're 55 households, it's where everybody knows your name kind of a thing. Where do you see when people start to get into the progression where, doing things like an operations and tech audit, like at a size wise, starts to make sense, or, just different red flags that they might be experiencing that would say to you, like, okay, this is actually something that you need to look into and something you need to address now? Like, what are common red flags for people to actually need to do this kind of a work?
Yeah, I would say, when you're looking probably more at like year over year growth, if you're, hitting, I mean, definitely by 50% year over year growth, even maybe 30% year over year growth, you're hitting those numbers. And you're also starting to see that you're having to add on headcount. That's definitely a red flag.
Mhm.
Certainly, number of clients, if it seems fairly manageable, maybe it's not necessary, but I would say certainly by the time you probably have 100 clients, there's some efficiencies that you certainly can be gaining.
Mhm.
Um, I I think what's also important is for people to consider doing these audits, even if their growth remains, I don't know, I don't want to say stagnant, but consistent. And they're really not growing exponential, but they're maintaining. However, they've been on their same technology stack for, say, 5 years, and they haven't really changed anything. That's another time to really do a reassessment, because another facet in all of this is, especially if you're using any sort of cloud-based technology, which most people are nowadays, those platforms are being updated constantly. New
Mhm.
features are being released every month, sometimes even weekly. And if you're still doing things the same way that you did when you first converted to that system, or the way that you were initially trained, during the initial implementation, again, there's probably so many additional features and capabilities that you could be taking advantage of. More integration, again, eliminating duplicate data entry, all these things that you don't even realize are available. I even get we even get people that reach out to do these types of audits when they're considering moving to different technology, and they've are already in many cases made the decision that they want to change, because they say, well, X platform that we're on, it can't do this type of reporting, or we can't get this out of it. And yet we come in and go, absolutely, the system can do what you need it to do. You just didn't
Yeah.
even realize you're only taking advantage of 20% of what the platform's capable of doing.
Yeah. Yeah. No, I definitely see that. And especially, I think this year, next like year or two, with all of like the AI tools that are now getting baked into everything, I feel like even on my side of things with just the tax and accounting work, like we're reworking a lot of how we do our work just based on the availability of a lot of these tools. And I know for advisors, it's a lot, I think, slower uptake and cautious, which I totally get that. But just there's a lot more available in terms of like finding efficiencies or just doing your work more efficiently. I think it's about to explode. Like I was talking to an advisor the other day who brought on an AI note taking tool that it was is like gone through rigorous compliance, et cetera. working with this AI note-taking tool, and he was able to reduce his admin time by like half on meetings. So he was saving like hours and hours and hours per week that, it's just a tool. Like it was, a very inexpensive tool that he's been able to implement into his CRM system and use that. And so I think, even without having a ton of changes, like just some of the availability of some of these AI tools, like you can get some pretty quick wins on those
Yes.
efficiency gains. It can be harder for those bigger firms to get everything through compliance, but it's one of those things where I know for us internally, like I feel like we're evaluating new tools like every year now of just, okay, where can we shave off more man hours and more time, just because I know for the advisor industry, it's the same thing that my industry is facing, which is, we're going to have a big transition. There's not enough people to do the amount of work that's coming. Like there's just, the number of people that are leaving the wealth management industry versus people who are entering it. Like there's a big disparity there. So I think the more that on like both of our industries can really focus on, okay, so if we can make this more efficient, if we can make, the labor efficiency ratio on people doing the work higher, then we can offer better compensation, then we can be more attractive for people to enter the industry, then we can help fix some of the succession, issues, because we can make each individual in here, a higher leveraged person by tech enabling them better, and using some of these tools. But that's my little soapbox.
And I couldn't agree more. In fact, as you're talking, it made me think. Just yesterday, me and my team got to see a demo of a new platform that, like, they just came out like end of last year. They got a few, beta clients basically right now, and it's a platform that basically allows the end client to upload all sorts of documents, from tax returns and K1s to um, bank statements and any, just all sorts of details. They can basically download, drop these documents in, and then this tool basically is scraping all of those documents and pulling out all the relevant information, and then it feeds it directly into like your financial planning tool or into your CRM. So all the different data points. So instead of somebody in your office receiving all these documents and then having to manually key into your financial planning software, the client can literally just drop them in this folder that's on your website, all secure, and SOC 2 compliance and all that stuff, and just automatically feed into your system. Like, what a huge time saving that can be. It's just incredible. The other thing to consider too is, as we all know, there's this whole generational wealth transfer that people talk about happening. I mean, in our industry, in financial services, I've been in it long enough to see it's a slow moving industry when it comes to technology.
Yeah.
But people are going to need to be catching up. They need to be using more updated tech in order to keep up to date with their clients' needs and what their clients are going to be demanding, because people just in general day-to-day use are using more technology, and they're going to be requiring it of their advisors, for their advisors to be faster, agile, just I don't know, just easier to communicate, all of those things.
Yeah, absolutely. No, those are all great points. So for advisors who are interested in getting into your world, Verity, what's the best way for them to learn more about the work you and your team are doing?
Yeah, thank you. Certainly, our website is probably the fastest way, or either LinkedIn. We have links, of course, from LinkedIn on our website, but versoftconsulting.com. That is Versoft, not very soft. We get it misspelled a lot, but versoftconsulting.com, and there's contact form that you can fill out that'll come to us, and we'll schedule a call within a matter of usually days. We're pretty fast turnaround, and but yeah, or look us up on LinkedIn and reach out.
Love it. So for those of you listening, we'll post those links nearby, wherever this online. And any final thoughts you want to share with the audience before we sign off?
No, just appreciate the time and appreciate people's interest in technology. I know it's not on everybody's radar, but it does play an important role in all of our lives, and it doesn't need to be a pain. That's why there's people like us out there, is to be that knowledgeable resource and take that burden off of you. So you don't have to go it alone. That's what we're here for, to help.
Yeah, I love that. And I think from a financial statements perspective, what I've tended to see is like a dollar that's invested into software tends to produce a bit of a better return than a dollar invested into payroll. So it's good to get those tuned up and in good shape, and make it easier for your teams to work, right? Because I think a big part of this too is talent attraction. And if you can show them that you've built a clean machine for them to operate out of in terms of the tech stack and integration and everything like that, it makes their life a lot better too, and your
100%.
life, having eyes on things. So
Yeah.
thanks so much for joining me on the show. I appreciate it.
Thank you so much for having me. This is great.
So this was another episode of the Financial Advisors Want to Know podcast, and we'll see you guys next time.